Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of the video is Forex Day Trading Challenge, Tips and Tricks, alright? I'm looking at the pound-dollar currency pair on the hourly chart. If you look carefully here, the price went down from here to this point here. So there was a down move, and the price rallied up to the 50% Fibonacci retracement zone. All right. When the price found a resistance at the 50% Fibonacci zone after a downtrend, okay. The ultimate target for the down move is at 150 Fibonacci extension zone. If you look carefully here, when I'm moving my cursor, you can see 150 Fibonacci extension right here. As I explained to traders, the zone between the 150% Fibonacci extension and the 161%, 150 and 161% is what we call the oversold zone if the financial instrument is going down. So that's why I highlight it in orange. So we are in an oversold zone. If the financial instrument was going up and the price reaches the zone between 150 and 161% Fibonacci extension zone, that will be the overbought zone. So in normal condition, I'm waiting to buy the pound-dollar currency pair in this zone here. By checking the time of the day, in exactly 19 minutes, New York will be closed. This is not the best time for day trading, but I want to give it a chance. But at first, a little bit of challenge, all right? That's why we are calling this video Forex Day Trading Challenge, Tips and Tricks. The challenge that Forex traders are facing is first, the economy news, okay, because the economy news can change the dynamics of the market. So we don't want to use the technical analysis alone. So I'm going to also go to the Forex factory, and I want to show you what I'm doing here. I face a bit of challenge, and I want to share a few tips and tricks that you can also use. Now, if you are trading currencies, you want to understand the correlation between currency pairs. Because I'm looking at the pound-dollar currency pair, I know that the pound-dollar currency pair, 90% of the time, not always, will move in the same direction like the Euro-USD, the Euro-dollar, okay, which is the leading currency pair. I also know that the Australian dollar-US dollar currency pair will also move in the same direction like the Euro-USD. So, if I want to buy the pound-dollar currency pair in this oversold zone, by the way, this is a bullish setup. So in this case, we'll use the trading drill, the setup, the signal, and a low-risk entry point. If you are TSTW24 trader, from the setup, so we see the setup, we go to the higher time frame to validate the setup, and then we go to the first best time frame to use the TSTW24 trading system. So I face a bit of challenge, so I'm going to go now and look at the Euro-USD because I cannot just place a trade now like this, trading the pound-dollar currency pair without checking what's happening with the Euro-USD. Okay, so let's bring out now the Euro-USD on the hourly chart. This is the Euro-USD. You can see that I still have some of my drawing on this chart, and also I place on my chart Pitchfork tool. If you want to know more about Pitchfork tool trading, go to www.dayprotraders.com, okay? I'm going to remove some line on my chart, and I want you to follow me carefully and try to understand what I'm trying to do here. All right? So you can see again, like the pound-dollar currency pair, the price went down. So what I'm going to do now, like we did for the pound-dollar currency pair, which is moving in the same direction like the Euro-USD, you can see that the price went down from here to here, all right? Okay, I'm going to remove my Fibonacci tool and use a new one. And I'm going to draw Fibonacci retracement again for this time for the Euro USD. I want to move my thing so I can see exactly where I'm placing. Okay, that's great. All right. So the 50% Fibonacci retracement level for the move from here to here for the Euro USD is right here. Okay. So the price went down from here to here, as we have seen for the pound dollar currency pair. And the price went to find a resistance here. But the market preferred to retest this trend line here, which is the pitchfork tool. Why? Why? Okay. If you draw your trend line, suppose you draw a trend line, as I said to trader, draw your channel. So the price was in the rising channel here. Okay. See the blue channel, roughly. Was in that channel. Okay, so the price came out of that channel 1, 2, 3. Instead of finding a resistance here, there is a better resistance. That's why I say to traders, we are trading the price, not the indicators. We are using the Fibonacci, but we are not trading the Fibonacci, we are trading the price. The best resistance is on the edge of the blue channel. All right. So that's why the price did not stop at 50% here. So it went to return the pitchfork tool. You see, we need 3 points to draw the pitchfork tool. This point, and this point, and this point. So what the price has done, the price came out of the rising channel. Okay. So what we will do, using market geometry, we can project this channel to the other side. But as the price came out of the first channel, it went up to retest the edge. Not exactly, you can see. Couldn't touch it, but near the medial line of the pitchfork tool. And now it's going down. The good news is that what is happening here, this move here is a kind of a distortion. You can see that they push it very fast because the market prefer the resistance on the edge here instead of this 50% zone. That's why they push it fast to retest. You can see that as soon as they retest it, they just roll it down. This is a kind of distortion. So if you were selling here, it's a bit risky because there's a better resistance here. So you will be aware of it. I'm not saying that you cannot sell here, but if you were selling here, you need to be aware that if the market will prefer the resistance here, better resistance, which is the edge of the channel here. All right. So this move here, I consider it as a distortion. What has happened, the retest of the 50% is still valid, though the price went all the way up to the 78%. I am discounting this move from here. You can see it's a tall candle all the way to retest here. It's not a market manipulation. It's just the market prefer a better resistance on the edge of the channel here instead of this 50% zone. But one thing you need to understand, the 50% retracement is the level that we should consider, not the 78%. It's just because the market prefer, you see how the price went up, it didn't go up. You see, when it was going up, you see going out normally, okay, to return the 50%. Here they push it fast to retest the edge of the channel. That's why I don't want to consider the 78% as the key level using the Fibonacci. I will stick to my 50% because when I'm using the Fibonacci extension, I will use it in relation to the 50%, not the 78%. This move here is a kind of distortion. The market prefer this resistance on the edge here. So why am I saying this? We want to trade a pound dollar currency pair. But here we are looking at the Euro USD, which is the leading currency pair. The reason why I cannot buy the pound dollar currency pair straight away now, let's click on it. This is the pound dollar currency pair. It's in the oversold zone, but I want to be a little bit patient or to be a little bit cautious, okay? If you look carefully here for the pound dollar currency pair, let's start drawing line like we did for the Euro USD, okay? Roughly the channel, okay? So the price was in the rising channel, okay, something like that. See the blue channel, okay? Now the price came out of the channel. Okay, let's remove this so you can see it. In this case, the market did not push it to the edge of the channel. I don't know why, but the market did not push it here. All right. There will be another reason why the market may not do that. Okay, if the market is too bearish towards the pound-dollar currency pair, they will be happy to sell it straight away. But for the Euro USD, we know that there is a meeting for the Eurozone finance minister going on right now. So probably the market was a bit cautious, preferred to sell at the best place instead of selling here while that meeting was going on right now. Let's go back again to the pound-dollar currency pair. Okay? If I draw now my pitchfork tool for the pound-dollar currency pair, I will select one point here. As I told you, we need 3 points. And I will select this point. And I'll choose this point also. So I have my pitchfork tool right here. Again, you can see that the price did not come all the way here. And it stopped at a 50% Fibonacci retracement level. If you go to dayprotrader.com talking about fractal trading, I talk about what we call parallel fractal pattern. Because the pound-dollar currency pair is going in the same direction like the Euro USD, sometime either the Euro or the pound will be ahead of the Euro USD. In this case, the pound-dollar currency pair is already ahead of the Euro USD because it's now in the target zone, which is also what we call a convergence point. This is a convergence point where both bulls and bear will buy. The bear will buy to close their bearish position. The bull will buy for trading purposes to remain a trade, all right? So the pound-dollar currency pair is ahead of the Euro USD. Let's go back now to the Euro USD. So as I explained to you, the pound found a resistance at 50%, but for the Euro, they push it up to retest the best resistance level. This is risk management taking place here. I consider this move as a distortion. In my view, using Fibonacci retracement, Fibonacci extension, as I did for the pound-dollar currency pair, all right, so there's a high chance that the Euro USD also, slowly but gradually, will come back down to retest the zone between the 50%, between the 150 Fibonacci extension and the 161.8% Fibonacci extension zone. Okay, this is why it became a bit tricky for me to rush and buy, okay, the pound-dollar currency pair. So my expectation is that 50% Fibonacci retracement level, the pound has already hit the level of 150 and 161% Fibonacci extension zone. We are expecting the euro also to go into the same zone, 150 Fibonacci extension and 161.8% Fibonacci extension zone. The bearish pressure is on the euro to continue the move to the downside. That's why I cannot rush and buy the pound-dollar currency pair. Why? Because if the euro continue to go down, all right, the bearish momentum or the bearish sentiment toward the euro may also influence the pound-dollar currency pair. What professionals are doing, they will sell the euro and sell the euro dollar and sell the pound dollar at the same time. This is what we call basket trading. So because of these type of traders that trade currency pair like that, in a group, in a basket, all right, I need to be patient in case they start selling the euro. If the euro continue to go down while I buy the pound dollar currency pair, that will make my trade fail. So I will be waiting for the Euro USD to go down, and if you reach this zone, all right, or near this zone, I will decide to buy the pound-dollar currency pair. This is critical for new traders to understand the correlation between currency pair. Traders get into trouble sometimes with that, and they place a trade anyhow, and sometimes they have a losing trade if they are trading Forex, not because they make a wrong decision, but because they time the market wrongly or they do not understand the correlation between the currency pairs. So what should I do now? So while I'm waiting, I can look for opportunity to sell the Euro USD because that's my expectation, all right? Okay, I can sell the Euro USD now. And as I'm expecting it to go down, and if it's going down, I'll be rewarded until it hit the target zone, all right? But remember, if the price is going down, the price looking for a better support level. So what do I need to do on my hourly chart here? I can draw some support. Let's say support the price change direction here. So I can decide to take my first profit here, okay? Or I may decide to, there's another support here before the ultimate target zone, all right? Let's go back now to the Forex factory. Apart from the correlation between currency pair, talking about the Forex day trading challenge, tips and tricks, all right? Apart from the correlation between currency pair that traders get into trouble with, I have recorded a video recently that I posted at George Trio YouTube channel, George Trio YouTube channel. And I explained to traders, I say, okay, how I trade Forex like a pro. Check that video. How I trade Forex like a pro at George Trio channel. Okay. I show traders the exercise that I do when I pay attention to the economy news. Though we are talking here about the technical analysis, talking about Fibonacci retracement, Fibonacci extensions, we don't want to forget the economy news. If you are trading stocks, you go to Google Finance or Yahoo Finance, type in EPIC, check the balance sheets, check the economy news, all right? And also do what we call perform the Google Finance acid test. So looking here, okay, you see here, ECO, okay, FIN meeting. This is, if you click on it, this is about a meeting that is taking place right now, okay. Meetings are usually held in Brussels, okay, attended by finance ministers from the European Union member states, okay. So this is going on, this is this week. So the market is watching carefully. So that's why I said to you, the market prefer to push the euro to the edge of the channel instead of selling it straight away at the 50% because they want to control, okay, the risk. All right. Also today, we have a lot of bearish news for the pound-dollar currency pair. That's why the market, as you can see, they just went ahead and sell. Let's bring on the pound. They went ahead and sell the pound. So technical setup, 50% Fibonacci retracement level, plus all bearish news. You see, 1, 2, 3, 4 bearish news for the pound-dollar currency pair. Excellent. This setup, there's no reason you should be afraid because a lot of bearish news, fundamentally speaking, plus a bearish setup, game on. Game on, all right? For the euro, you can see that this meeting that is taking place, the market here, okay, ECOFIN meetings, the Eurozone finance ministers meeting is taking place all day, as you can see here. It's influencing the euro. But there was some bad news also for the euro. The German ZEW economy sentiment, industrial production bearish, ZEW economy sentiment bearish, 3 data today for the euro, bearish. All right. So we are not trading the technical alone. We want to combine the technical trading with fundamental analysis. Doesn't mean that we are trading the news, but we want to be aware of the economy news, which impact the economy news may have on the market. We try to play a little bit of mind game, okay, and see what's going on. So the mind game, the pound, most new economy news were bearish. This is how professionals are talking, right? So the economy is not doing very well as expected. Okay, we have a bearish setup. Why not go ahead and sell it, okay? Fundamental traders will sell, technical traders will sell. That's what we want. We don't want to fight other market participants. We want to trade together. But for the euro, we know that other traders will be a little bit careful. So that's why, as you can see for the euro, all right, the market, you see today, they push it up to the edge. You can understand straight away that these people want to sell, but they don't want to sell, okay, as London did open today, they don't want to sell anywhere. They press it to the best place. You see, they sold it here, You see, they push it. If you see this candle here, okay, it's a smart money activity. They just want to sell here. So what they usually do, orders will be already placed here to sell before they will buy it to push into that zone. As the price reach this zone, the sell orders will be filled. Orders filled, orders filled, orders filled. And here it is, you see, boom, 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 down. You just drop it down. That's why I'm sticking to my 50% Fibonacci retracement. It makes sense? It is also powerful. All right. This is the end of this video about Forex day trading challenge tips and tricks. To summarize this video, one must always combine the technical trading and the fundamental trading. If a financial instrument is going down, all right, and it rally up to the 50% Fibonacci retracement level, the ultimate target is the 150 Fibonacci extension zone. The zone between the 150 and the 161% Fibonacci extension zone is what we call the oversold zone if the financial instrument was going down fast. On the contrary, if the financial instrument is going up and the price rally into the zone of 150 and 161% Fibonacci retracement zone, that's what we call the overbought zone. The challenge that Forex traders are facing, the first challenge is about the correlation between currency pair. As I explained to you now, there is a bullish setup for the pound-dollar currency pair, but technically speaking, if I disregard the economy news, I can just go and buy, and I can end up losing. All right? That's not the best way forward. But considering the correlation between the pound-dollar currency pair and the euro-USD, knowing that the euro-USD can influence the pound-dollar currency pair, in fact, the euro-dollar is the leading currency pair, I must be very, very patient, okay, wait until the dust has settled for the euro-USD before I may, okay, be confident to buy the pound-dollar currency pair. It does not mean that the pound-dollar currency pair cannot go up from here, but it just, okay, the challenge that we face when we are trading Forex, we cannot ignore, okay, the correlation between currency pair. The second challenge is about the economy news. A lot of Forex traders can trade, but they don't want to know anything about the economy news. But it doesn't mean that they cannot use the fundamental analysis. It's just because they are not interested. What we are trying to do is to encourage traders, or slowly to show traders how they can also incorporate the fundamental analysis, okay, into their trading. Why is it so important? It is important these days to combine the technical trading and fundamental trading because of the type of market participants that are moving the market. The hedge funds, the bank, the big institution are combining the technical trading and the fundamentals. If you are trading Forex and you are the purest technical trader, you are likely to make a lot of mistakes unless you are a very lucky, okay, a trader. This is the end of this video. I hope you have learned something from it, okay, and we put it into use, okay, to make excellent day trading decision. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.